Yeah, welcome back. It's AFEX time. A mixed summary is what we see for the week ended 4th of July. Well, we have David Ibidapo, the head markets data and research at AFEX, to give us the details. Hi, David. Good morning.
And good morning, Hini.
Yeah, great.
How are you today?
So I'm great. Thank you so much. So let's have the details of the week ended the 4th of July.
Okay, thank you, Hini, for that. So when we look at the last week that just ended, so we saw that across a lot of commodities, it was a red week for most of the commodities, right? So about 12.7 million contracts were settled on the floor of the exchange, which was about 68% when compared to upper week of 40.8 million contracts that was settled that week, right? And these contracts were valued at 7.8 billion naira, which is also like 19.8% lesser, a decline compared to the upper week, right? Our benchmark index, which is the AFEX Commodities Index, closed at 465.90 index points, which was a marginal decline by 1.30 week on week. And our AEI, we saw a marginal increase in our AEI index points, which closed at 189.68, which was marginal increase by 0.02 from the previous week, right? When you look at the composition of the volumes that was traded across commodities on the exchange, you see that sorghum actually accounted for more than 70% of the total volume that was traded on the exchange, and we put that number at 3.4 million contracts of sorghum. Cocoa. Cocoa accounted for 4.8 million during that period. In the last week, we saw that ginger actually topped the gainers chart, the only commodity that recorded a positive week-on-week performance. So ginger closed at 1,189 naira, which is 17.77% when you compare it on a week-on-week basis. However, for other commodities, it was a decline across all the commodities during the week. Sorghum dipped by 25.57%, closing at 214 naira.54 kobo. Cocoa was down by 21%, 21.28% roughly, and closed at 978.69 naira. Sesame was down by 11.32% and closed by 680.01. Then we saw paddy rice also decline by 7.04% and closed at around 226.77 naira. Then also we saw cashew. Cashew was down by 9.93% and closed by 616.83 naira. And maize, which is the last but not the least, maize closed around was down 0.04%, which closed around 225 naira per contract. Then soybean recorded a muted performance week on week, retaining its earlier price of 421 naira.83 kobo. If you want to trade on our exchange, you can download our COMEX app, which is available both on Android devices and also on iOS devices, App Store, right? And also, if you want to learn more about the commodities market, you can visit our website, www.africanexchange.com. Thank you.
All right, thank you so much, David. Well, let's review how the commodities market performed in the first half of the year, and then probably we'll have some time to do a little bit of outlook for the next half. So from AFEX perspective, how did the market fare in the first half of 2022?
Okay, thanks, Ini. In the first half of 2022, I think what I would say is the major highlight for that part of the year was the Russia-Ukraine crisis, and we saw a lot of supply chain disruption in the global space, which led to a number of commodities record historically higher prices during that period, right? So if you take a look at Brent crude oil price, you see that Brent crude oil price is about $104 per barrel. When you compare it to the price of Brent crude oil last year, that's about 42% year on year, and this is the highest price that we've seen historically since 2013, right? When we fast forward to wheat price, you can see that also wheat price in the global space has accelerated by more than 40%, and also we can see that fertilizer prices has also more than doubled, right, during the same period, right? We've seen this stoke or induce inflationary pressure across the globe, right? Nigeria not exempted, right? And we've seen a lot of central bankers taking a hawkish stance to fight and ameliorate the effect of the inflationary pressure, specifically in the food aspect, right? Then we've also seen across Africa food makers take position by increasing their demand for substitute commodities, which has little effect, which we saw little effect of the Russian-Ukraine crisis on, right? Then when we come to the Nigerian space, we could see that between the start of the season till around January, the ending of January, we saw large spikes in prices of commodities, especially grain commodities, and this was largely induced by the demand pressure from large buyers and processors, the millers, right, which drove most grain commodities prices by about, on the average, around 20%, right? However, in February to March to the end of Q1 2022, we saw prices began to decline, and reasons being that most of these large buyers were already exiting the market. They had already purchased a lot of what they would need for as inventory for the year, right? And that way we saw prices began to decline, and across most of these commodities, prices declined by about 7 to 10%, right, on the average. We didn't really see the impact of the Russia-Ukraine crisis directly on the grains market, and that's because of the timing of the crisis, right? The crisis started around February 24th, which was the period when most of these large buyers, right, were no longer in the market. So we saw just some mild effects, right, on the price of commodities. However, fast forwarding to the second quarter of the year, we saw that most grain commodity prices started picking up due to the Ramadan effect, so the fasting period, which reduced a number of activities in the open market, right? However, this pressure on prices was actually short-lived, and we saw a reversal, that's a decline, right, towards the end of the quarter. However, towards the end of the second quarter, we started seeing a little pickup in prices of commodities as farmers resume that planting season, which typically they would have to buy grains to start planting. So that little buy pressure actually saw some price of commodities began to increase, but marginally.
All right, so what should we expect in the next 6 months, especially in terms of production, volume, and price?
So our outlook for the next 6 months is bleak bleak actually. So let me put it this way, right? For production and for prices, right? You know, a major pass-through for the Russia and Ukraine crisis is actually to Nigeria, is actually in terms of the wheat price and also the fertilizer prices, which have actually gone up. Fertilizer prices has more than doubled. We've seen wheat prices increase by more than 40%, right? Which will naturally induce a shift in demand to other close substitutes, right? And so we are betting that we are going to see a lagging effect of this impact on after H2, right? This year, because now the farmers have resumed planting, right? So they would have to buy fertilizers at a higher price, which will lead to higher cost of commodities at the end of the day, right? So we are betting that production, because historically when you check the numbers, right, every year where we had seen spike in fertilizer prices, there's always a significant reduction in fertilizer consumption in Nigeria, right? And we all understand, and you can agree with me that fertilizer as an input it's key in increasing productivity, in increasing output for the year, right? So we are betting that production levels will be lower this year across major grains, right? Across major commodities, right? And this because of farmers would likely use less fertilizers this year. Then also we've seen a lot of farmers begin to opt for local seeds varieties as opposed to improved seeds, which is also significant in improving productivity and output, right? And you should know that once we are anticipating lower output this year, it will also have an effect on prices of commodities, because low supply in the market amid an existing high demand, right, would actually stoke up prices of commodities, right? So we are betting that the price of commodities this in H2, at least in the new season, would actually rise. So we should be expecting new historical highs, right, upon harvest in the next season. And also lower production
David,
across
David,
commodities.
we're almost out of time. So just very briefly, how is AFEX positioning itself for the second half? Just very briefly, because we are out of time already.
Okay, so at AFEX, one of the things we are doing is to ensure that we still intensify our efforts in input financing for this year, so that our farmers can at least get enough inputs, right, to deploy in this year's planting season, right? And also, you would agree with me that the threat to food security across Africa is actually increasing day by day, year on year. We can't bet that there won't be another crisis next year, right? So one of the things we are trying to do also is to see how we can replicate our models across a lot of African countries, right? By expanding into these countries and seeing how we can replicate our models and ensure that we feed Africa and we ameliorate the challenges that are faced by smallholder farmers across Africa.
David.
Thank you.
All right, David. We do hope that you will feed Nigeria first before feeding Africa. I mean, a lot of countries are practicing crop protectionism. So thank you so much, David Ibidapo, Head Marketing, Data and Research at AFEX. Thank you for your time.
Yeah, thank you very much, Ini.